and welcome. We have seen gold prices hit a record high. MCX gold prices jumped 25% year to date, and our markets surged 1%. The Nifty and the Sensex surge over 1% in trade. Nifty reclaiming that 24,000 mark, and the Sensex crossing that 79,000 mark. Of course, Nifty Bank also hitting a record high, rally in, of course, all banking stocks that we have seen. But what really is happening? Now, uncertainty globally persists as far as US China and the trade war concerns remain. Ukraine Russia concerns geopolitically also remain. And so, therefore, we've seen gold prices continue to hit a record high on safe haven demand. While we've seen India stock markets, the Nifty and the Sensex continue to jump on optimism over the US India trade deal. But what really should investors do, and how should they approach both gold as well as equities? Well, to decode that, I'm joined by Chokkalingam, founder of Economics Research and a senior market expert. I'm also joined by Anant Ladha, founder Invest Aaj for Kal and an MF distributor. Thank you both for your time. Chokkalingam, if those who are tracking the markets and gold prices very, very closely and what's happening in the rest of the world versus what's happening in India, what should they expect in the near term as far as gold and equities are concerned?
As far as gold is concerned, it has played out in a very big way. There could be marginal upside, but if you ask me whether it can go up substantially from here, I am very doubtful. The first reason is that the dollar exchange rate, dollar index would be under pressure now due to aggressive tariff war initiated by US. US economy itself is expected to slow down. So the landed cost of gold may not jump in a big way from here. I think for the next 6 months to 12 months, it may go up 3 to 5% at best, but it should stagnate in the short to medium term. As far as markets are concerned, Indian market should continue to do very well. I have been consistently saying that, the most affected countries are US and China. US has imposed duties on almost all major imports, almost on all major economies. So that would hit US economy in terms of high inflation and low growth. And the maximum tariff hike is on China. So therefore, Chinese economy also would be impacted. In between India, we don't have much exposure to goods exports. The goods exports account for only 10% of the total GDP. So it's primarily domestic demand driven. And also with the inflation rate hitting record lows, monsoon forecast being normal, and all this would augur well. And still, even now, we are down by about 50 lakh crore from the record high of overall market cap seen in September 2024. So there is a headroom for steady recovery in the Indian market in the next few weeks.
All right, Anand Ladha, do you agree? What are your expectations from gold prices going forward as well as equities going ahead?
See, my present outlook is 2025 is an year of asset allocation and shifting from extremities to normalization. What do I mean by this? Firstly, if you have proper asset allocation and equity, gold and debt, you will be happy in 2025 and you will be happy to sail through this volatile period. I feel there is still some volatility left for us, which we might see in next 2 quarters, specifically from results side. Right now, as far as India is concerned, best part about Indian companies are the debt to asset ratio is presently at one of the most positive side, and we have not seen such levels in past, so that is one big positive. But at the same time, return on equities, will we be able to cope up in the coming future? Will we be able to give good results in next 2 quarters? That is a big question mark, due to which I think we might see some volatility in next 2 quarters. Secondly, what I said is this year is year of shifting from extremities to normalization. We firstly saw extreme returns in equities. Now we are seeing some normalized returns. In the same way, we saw some extreme returns in gold, and I feel in coming period we might see some normalized return. Do I mean to say that we can see 40% fall or 50% fall in gold? Absolutely not. We are seeing some headlines and some analysts giving that call, but I am not on that side. But at the same time, can we see some retracement and some normalized return post that? I would say yes.
All right. And of course, for those saying that, look, India remains resilient while the rest of the world is increasingly facing more and more uncertainty. And that is what is going to reflect in global prices versus India's equities and, of course, commodity prices. Do you agree, G. Chokkalingam?
India would be actually a beneficiary of this trade war. Yes, would be wrong to say that India's exports would not be impacted. But the point is that for last 3-4 decades, we never created a current account surplus consistently. We always had a problem of growing the goods exports, and that problem has now become a benefit to India because we are not going to be affected very badly, as I explained earlier. But at the same time, whenever global economy had a pain, it created some gain to Indian economy and markets. It was very clearly visible during Lehman crisis and then COVID time, and even in 2016 January February when world saw signs of deflationary. In all three episodes, what happened? Oil price also crashed. Even now, the global crude oil price are down 20%. In fact, this morning the media has indicated that the Indian basket of crude oil is at a 47-month low in last month. So India would save a lot of money on import of oil, and that would have a multiplier effect in terms of lowering the inflation, improving the corporate earning, improving the fiscal balance of the government, and improving the forex resource, and therefore even helping the exchange rate. So all this would augur well, and therefore net to net, I think India would be a major gainer. That's why the foreigners are coming back, and they would come back in a very big way. Even the retail investors, despite a crash in the market in the last 6 months, at every week, new investors are coming at a rate of 4 to 6 lakh investors per week. So that trend continued even the last week. So all this would augur well. I am extremely bullish on the Indian equity market. So only if monsoon becomes a miserably failure, it might create. Otherwise, even normal or slightly below normal, India's story would click in a big way in the fiscal year 2026.
Right, Anand Ladha, do you agree that India, of course, he is bullish on Indian equities going ahead? India's, fundamentals remain resilient, and of course, from the rest of the world, while India is resilient, but India cannot be insulated at large from what's happening globally. But we are seeing what's happening in global markets, and of course, global commodities is very different to what's happening in India's equity market. So, your thoughts going forward?
Totally in line with the view. I think next 5 months will be volatile, but if you talk about next 5 years, I think India and even emerging markets are bound to outperform. In the last 10 years, we saw that US market and the developed economies were outperforming the overall world market. But I think in next 4 to 5 years, emerging markets will outperform the developed markets because eventually there has to be normalization in the returns as well. So that is bound to follow. And from this complete US-China mess, obviously India will be a beneficiary. But before getting that benefit, we will have to face international market volatility, for which we should be ready for next 4 to 5 months.
All right. Thank you both for sharing your thoughts and, of course, for decoding this for our viewers. We will continue to track what's happening in commodities as well as equity markets. Thank you.
Thank you so much.